You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, welcome back to TWIFO, This Week in Futures Options, a program where the name says it all. We break down the week that was and indeed still is in all things futures options. Could be equities, could be ags, could be metals, could be energy, could be lean hogs, could be whatever the heck is floating our boat this week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You guys know how to get it by now, live, Mixlr.com, after the fact on your podcast provider of choice. Make sure, however you listen, live after the fact, you vote in our polls, you send us your questions, you play along. That's really the fun part, is getting you guys to play along and send in your great questions and comments and all that good stuff. We do, yes, indeed, we do like to hear from you guys. Let's see who else we're going to hear from on the show today. Let's see who's joining us on the old TWIFO. First, I believe we are joined from maybe down the street, maybe across the globe. I don't know where he's beaming in from. Mr. Sean Smith, the Managing Director of Derivatives Licensing. Say that 5 times fast. Over there at FTSE Russell. Mr. Smith, welcome back to TWIFO. Where the heck are you beaming in from today, sir?
I could say that 5 times really fast if you need me to.
You probably are more practiced at it than I
am. I am beaming in from down the street. I'm here in the windy city, crispy, windy, cold city of Chicago with you.
Yeah, we're getting a legit winter this year. You know, I knew they cursed us when it right like around October. They said, "Oh, this is going to be one of the mildest winters in years." Once they said that, I said, "Okay, we're done. It's going to be feet of snow."
You knew we were done.
Yeah, it's going to be a cliche Chicago winter that everyone thinks we get, but spoiler alert, we don't really get them. So it's kind of nice for us who live here, except times like this when we do get the old Siberia back in town. And then I think he's probably out in the burbs, but let's see. We're also joined by the man holding down the fort over there in Bantix land, the creator of a little thing we like to use called Quick Strike, Mr. Nick Howard. Nick, welcome back to the show, and where the heck are you beaming in from today, sir?
I am in the home office again today, and I was going to say Sean doesn't have to repeat that 5 times because the echo on his reverb repeated it 5 times for us, so it was okay.
Am I echoing?
That's the magic of telephone, the magic of telephone, sir. So we gotta get Sean in studio. We like to have him in studio whenever he's available.
Yeah,
Plus, that means we get to have delicious burgers. It's that time of month, so let's get into some of the numbers first. We're just breaking them down on an option block for the equity side of the space. Let's break them down over there on the futures option side of the space as well. The numbers coming out from CME for February, averaging 19 million contracts a day. A pretty robust February, up 7% from January, but still down. Everything's pretty much down from a year ago. Remember, last February, listeners, was just a rock'em sock'em robots period in the marketplace. So last February, it was 27.3 million contracts. Not quite that this year, 19 million. OI, 126 million contracts, down 3% from a year ago. Let's see some highlights for us in the options side of the fence. Corn options, a highlight there. ADV growing 32% to 100,000 contracts. So I know soybeans gets all the heat, all the love, all the interest, and we're probably going to talk about them later. We have a listener question about that sort of stuff. So they get all the spotlight because of the trade war, but corn options actually doing pretty well, up 32%. Our old friend, the lean hogs, lean hog futures and options ADV up 8% to 64,000 contracts. Wheat, another ag name, wheat options ADV up nearly 25% to 45,000 contracts. Let's see, energy overall volume 2.3 million contracts. That includes the futures, obviously. Copper options OI, 57,000 contracts. That was a record on the 22nd of February and a record daily volume of 12,500 contracts on February 20th. Now, we talked about copper before. It's not really the most scintillating of option stories, but it has been growing of late. Maybe that's one we'll have to keep an eye on more going forward. Platinum, our other friend in the precious side, futures and options ADV jumping up 11% to 20,500 contracts. Copper options ADV, going back to the options, more than tripling. Again, like we said, the copper options story starting to be resurgent. You know, it wasn't a big, huge options story, and it was pretty much totally driven by Chinese demand. The latter part is still the case, but the volume still growing, which is kind of interesting. Overall, options volume averaging 3.5 million contracts a day in February at CME. That's down 42% from February of last year. Remember, last February was the outlier of outliers pretty much. Some new stuff that's also doing well. The S&P 500 Total Return Index futures and options. ADV growing 83% year over year to 2,200 contracts. Again, that's a newer contract, so not quite surprising there. Anything in this broad panoply of contracts and records catching your eye or surprising you, either Nick or Sean?
I was just going to say, you mentioned equities down. They just came off a banner month in January where I think every other asset class at CME was kind of on the downside, and equities was the silver lining. So, ebbs and flows. I think March is going to be one of those big volume months again. So, you take the good you take the excellent with the good. Let's put it that way.
The excellent with the good. I like that. Mr. Nick, anything resonating with you, sir?
Well, I think the first thing was this like numbers burst? Was that our CME hot seat guest? That whole big rundown.
I guess you can call that if you like. We like to break down the numbers across the board at the beginning of the month whenever they're available. We do it on the option block for the equity option space, and so it makes sense to do it for the futures option space as well because they have different, shall we say, centers of gravity sometimes, which is interesting to compare and contrast.
Yeah, so we got a good. So that's a good hot seat guest regurgitation there. I like that because it gives a nice overview of everything that's going on, especially some of the more esoteric ones like the total return, and hopefully we can start paying attention to copper because we like the metals around here too. My only comments would be I think I'd be curious to see what happens with gold volume and OI this month, given how we basically just retraced everything over the last 7 days or so. Most of that being, or over half of it being in March. So it'll be fun to approach that in April when we do our first show to see if that continues, because I'm sure that it was pretty good this week, given the move that we've had already. So, I think all of these other numbers, the one that kind of catches my eye as well, just because I've been seeing a lot of stuff on it lately, are the SOFR futures. So more and more you're seeing those kind of replacement contracts, if you want to call them that, picking up volume every day. So it'll be fun to watch that, the progression as well.
I was just going to add, as you mentioned, total returns. There's a suite of total returns, and I think that's something for everybody to watch as well. These total return index futures, which are replacement for total return swaps in the cleared environment, futures and options. And there's Russell 1 and Russell 2000 total returns as well out there. But I just wanted to mention that cleared versus uncleared margin rules you're going to see a lot more of these types of products coming out because there is going to be strong demand for the cleared version of these products.
Well, I just ran down a whole litany of products and complexes. Where do you guys want to start first? I'll throw it out to either of you. Whoever wants to toss out a product category first that resonated with you, we will start there. So whoever wants to go. 3, 2, 1, go.
I thought I was going to let Sean go first.
I went last week, so I'll let you go.
I'll go. I'll say. I gave my ideas out earlier. I think there's some interesting stuff in gold and the 10-year, and of course we'll cover crude because it's had some kind of back and forth news as well. So Sean and or Mark, from those three, you pick it out.
We don't talk 10-year a lot. I know you're an old school kind of rates guy, and I mean old school in the most charitable, experienced rates guy. So maybe we'll start there, just because it's not an area we like to play that much. Our friends over there in Europe talking a lot of macro fun stuff this week, which always tends to have some interesting. We were actually joking on our last show, actually, that spot in the curve between like the 3 and 5 year kind of range seems to be where interesting things are abounding. But sounds like you're talking the 10-year this week, Mr. Nick. What is resonating for you out there in the 10-year, sir, before I start breaking down some of the volume?
Well, I think the most important thing there is that, and I'll push you a graphic to put out there. Vol is really low here in this product, so it's probably worth paying a little bit of attention right now, because it is approaching its multi-year lows. It's not the lowest it's been, but it's outside of a standard deviation, and it's very close to the lows that we've seen at least over the last 2 years. On top of that, we have a pretty balanced shape on the vol curve. So, you're on your lows, you got a balanced shape. So it's kind of, to me, again, just sort of the potential is in both directions, right? When you get kind of the regular symmetric smile, and it's not perfectly symmetric, but it's pretty darn symmetric. You get that symmetric smile. You have some low volatility. So what that might tell you is we're going to stick around for potentially in a little bit of a lull here with this and maybe reach some multi-year lows. But I don't think anybody has a real bias in terms of the direction. And we were talking, been talking a lot with, there's a new service out there that's really good. It's offered by Macro Hedged at Macro Hedged. And I've been talking to the owners of that, Adam and Hugh, and just they put out some trade ideas. And we were talking about the 10-year. And the 10-year has some good cheap bets out there right now to sort of do these, what I've been calling is mini straddles, where you get some wingy stuff and you hedge them. I think that's what I'm going to call my plays that I like when low gold vol. I'm going to call it mini straddles, because you get the same effect by hedging a low delta option, but you get the returns on it much more quickly with a lesser degree of range in the futures. But there's some opportunities out there in the 10-year, and I encourage people to go take a look at the multi-year or approaching lows in the volatility, and also the shape of the curve, and some opportunity, because it doesn't feel like rates are going to go much higher right now, because we had that little bit of a scare when we were approaching 3% here, and now we kind of backed off, and we had a little bit of break in the last couple of weeks, but we've actually retraced some of that as well. There was an expectation that the GDP was going to be kind of weak, and we get a little bit of rally. So it wasn't what people thought from the initial call, but they're thinking a revision is going to take place. So, we might see some of that retracement, but wanted to talk to the 10-year because of where it is from an overall volatility standpoint.
Yeah, you're right. It's an interesting product. We don't break it down that often here on the show, but it's always fun to play in some other products. Looking right now, you mentioned the vol, kind of anemic, a bit of a mixed bag this week, up a little bit in the front portion of the curve, unched to down a little bit as you go a little bit farther out, but not a ton out there. So an interesting vol story out there. The strikes are always crazy to our audience who don't pay attention to this product in terms of where their future right around 122.2 right now, and it's the 122 half calls out in May that were leading the dance by an order of magnitude, by about 2x the other biggest trade in any other month. 122 halves, listeners, doing about 114, almost 115,000 contracts. The lion's share of that on Wednesday, 97, maybe a bit of a vertical going up, because also the 124 halves were trading. So maybe a bit of a 2-point vertical. Worth noting, 102,000 of the 124 halves also traded this week, with 91,000 going up on Wednesday. So could be just similar paper, but either way, the lion's share of both of those strikes going up, over 90,000 contracts on Wednesday. So maybe a bit of a funky vertical, 122 half, 124 half in May, going up out here in the 10-year. The 10-year, interesting stuff. Whoever thought that the Treasury complex would start to heat up and be exciting again? I'm with you, Nick. Doesn't seem like rates are on the move anytime soon, but still, there's some interesting vol and some interesting activity to break down here in the world of rates and all things rates. Let's keep on rolling into another product we like to talk about here all the time on the old show, because it's always moving. It's always delivering something. And that's, if you're following along, listeners, of course, cmegroup.com/TWIFO. Click on the energy tab there, or wherever you're getting your quick strike to use to listen to the show. Click on the energy tab, then click on WTI, and you'll see our next product, of course, Texas T, a.k.a. WTI, come into Showtime. It's up about 1.5%. Net on the week, with right about 50, a little bit north of 56 half. We saw yesterday EIA announcing 7.1 million barrel increase in crude stocks. That's bringing the current crude inventories just over the 450 million barrel mark. These are not as high as they were back in 2017 or 2016 at the same time when they were north of half a billion barrels being stored out there. Of course, that matches some numbers we saw coming out of the API. Sometimes they differ, those numbers. This time they were lining up, EIA and API, on Tuesday. We also saw, just in general, we're getting into that seasonal period out there, which kind of explains some of those stockpile numbers in the U.S. here, at least, of course. We switch over from a winter blend to a summer blend. We're kind of in the process of doing that now. Seems crazy in the height of frozen Chicago here to be talking about summer blends, but that's what's on the horizon for all the refiners. So that tends to be why people are starting to see those impacts on the stockpiles out there. In terms of impact on the product, let's see out there, Vol. Again, coming off yet again this week, it's kind of been the same story. Crude Vol can't really maintain a huge bid. It will get a spike, then it'll kind of come off again, particularly as we see us moving to the upside. That seems to be what happens in crude. The vol kind of turns to the downside, and that's pretty much what we're seeing out here this week. I'll let Mr. Nick handle all the shifting and the sliding and all the other fun stuff. In terms of what was lighting it up out here this week, let's go out to April. And I said we're at about 56.5 in the future right now, listeners. It was a 60 calls that dominated the tape here in April. 17,000 of those going up, the lion's share, nearly 9,000 on Wednesday. The rest kind of scattered throughout the week. Then we also had, looks like about 12,000 of the 57 calls. So almost at the money calls now, doing about 12,000 of those. The lion's share actually coming today, 4,400 of those lighting it up today. Oh, sorry, and then number 3, there were some puts. Those are out there on the downside, on the dark side. Number 3, the double puts, 55 puts, all in that same month, all out there in April, doing 11,500 contracts. The lion's share actually on Monday, nearly 4,000 going up on Monday. Mr. Nick, I know you like yourself some Texas tea. Anything catching your eye out here? Slip in, slide in, skew, volatility in crude this week?
I think that what I noticed over there was, we're kind of bouncing, we're like, I think bouncing around was mentioned. We're not really making a play in any direction here. We had a little bit of a move down, then we're kind of right back up today for the, we're up 30, 40 cents today. We're up not much on the week. You're seeing a true kind of knockdown in volatility. When you go through and look at, you're getting some, looking at the TWIFO report shift and slide column, you're getting some loss in volatility, some sliding back and forth from a lower strike to a higher strike, right? So the way the curve is shaped right now, you're going to lose some volatility and the slide down, but we're actually seeing vol get hit here a little bit as well. So as we kind of stay consolidated. And 77-cent move to me, the one, and it's funny because I'll digress for a second. An article headline came out that popped across my Seeking Alpha or whatever else it was that I was watching, or my Yahoo, and it says WTI slumping, right? And it's always interesting to me that slumping is 50-cent move in the WTI. So I always look, and I'm always fooled by the clickbait. If I'm not paying attention, but slumping to me is not a $0.50 off, right? I know it might be 1%, but the reality is it's a nothing percent within that. It makes no difference. It's a nothing burger in its entirety to me. But we are seeing some softness. If we range bound here, we're going to see continued softness. We probably will start to see the curve get a little bit more balanced. The vol curve itself, right now, it's still skewed to the put side. And we see some good offers in the middle range delta upside calls. So I don't think there's a lot of expectation. At least I hear the people that actually pay attention and watch and that say that there's more of a bias to the upside. I don't necessarily see it that same way. I look at the curve. It just doesn't feel like that's the case at all to me. It looks like there's not much expectation for the upside, and there's a good chance that we start to get
But Nick, if they don't put those headlines, how are you going to click on the story, right? How are you going to click if they don't make 50 cents sound sexy? You're not going to click on it. Then there's no click.
It was sexy. I slumping. I mean, the descriptions that they use. It makes me so mad just because that's what drives the fear of the people paying attention to have it's aggravating because they use these terms that are just overdone when it comes to direction. So, but you're right. That's the only way.
At least they didn't say crude and free fall.
I got
watch out below.
I got clickbaited the other day. I was so mad. I'm going to digress again. It was how they said a professor resigned because a campus decided not to have Chick-fil-A on campus, Rider University. And I was like, okay, the person's taking a stand. But what ended up happening, they resigned their post as dean, but they're going to stay on at the school and still get paid and tenured, right? So it's infuriating. But that's the whole thing. I wish I could generate clickbait enough to have people knock through to all the stuff, but
the tempest over Chick-fil-A. I like it.
Yes.
Well, we were joking about free fall and crude, where there is not quite a free fall, but quite a bit of protracted sell-off is out there in the equities these days. Coming into showtime, we're seeing Vol getting firmed up again. And Russell Vol leading the charge. A lot cooking out here in Russell land. I want to get to that with Sean. Let's break it down first. Coming into showtime, we had the VIX around a little north of 16.3 or so. We had the RVX, which is, of course, the Russell2000 VIX, at about a 19.5. So gapping up. The VIX up 1.5 handles from last show. RVX up nearly 2.5 handles. So pretty much widening out that spread single-handedly. That spread is up over 3 points now. The spread is over 3 points. It's net up over about 1 point over the past week. So Russell Vol spiking out there, which is kind of interesting. So Sean, a lot going on in your neck of the woods. The Russell Vol is spiking. And also, we talked about it on the show last week where I believe you were in London, some huge prints going up in the puts, longer term puts out there in Russell. So what the heck is going on? Walk us through it, sir. Russell, a lot of things happen in your neck of the woods.
As this market breathes, the skew finds its way back into the market. So here we are. What's that quote I always say? Buy puts when you can, not when you have to. It sounds like somebody took my advice last week with those large prints. So it's a nice breadth. The volumes have been much stronger on CBOE in the last few days, weeks, I should say. Also, volumes have been picking up in CME as well, as is open interest in the futures and options on CME Group. Something to watch. And we're about to get into that March-June roll period. So you're probably going to see volumes really spiking in the coming few days here. That's one thing. But two, as I mentioned, June, something that is always near to our hearts as we get into the June contract is recon time, right? So a lot of that stuff is going to be coming this quarter. So, stay tuned for lots of information on that front as well.
Yeah, it was really interesting to watch that big spike. Particularly, I think there were longer term puts last week. Any insight there? Have you been talking to any clients? Any new market makers coming online? Give us the behind the scenes scoop, sir. Any new clients coming up to you saying, "Hey, we're looking to," because someone clearly got on board with the Russell in a big way last week, the Russell options, and it was interesting to see. Anything you can give us? Any feedback? Any color there, sir?
Other than the fact that those spreads traded, I don't have the inside scoop. That's where we need me to get Rick Rosenthal to join me on the show, which I think we're going to be doing in the next couple of weeks. So I'm excited about that. Next few weeks, I should say, not next couple. But he's definitely the guy that could give us that kind of color. Same guy that you need to talk to about RVX as well, by the way.
Yeah, we'll have him on. And we also, I believe, you and I will be sitting down. I'm not sure if we'll be able to do it live. It'll depend on the connectivity. But you and I will be sitting down live in person at the FIA Boca show next week, which will be kind of fun. So get a little bit warmer climate, which will be nice. And also get to talk some fun equity stuff. I believe we'll have your buddy Tim McCourt joining us on that for next week as well in terms of what's lighting it up. So, yeah, it has been fascinating to watch, particularly just the divergence of the Russell Vol. I'm not sure why, given everything we've seen, it's been so macro-driven, why Russell is leading the Vol dance to the upside this week. But it certainly is, and that's something that is kind of surprising and interesting to me, and I think worthy of note. And as we see these volumes start to pick up, I think we'll start seeing these are the periods where we typically used to see a lot of trading in these products, is when the Vol kind of really diverges a bit, and I think we're starting to see that now. We're on the outer end of that spread, and that's where things start to get a little bit interesting, at least from my perspective. We like to look at vol, obviously, here, and when you're talking vol, a little bit of a divergence is a good thing. Anything catching your eye in equities, Mr. Nick, before we roll on to some other categories? Oh, I think Nick has self-muted himself to oblivion.
Self-muted, here I am, but I didn't say that much. I tweeted the pace of the roll currently for the E-mini Russell. It started. It's in like its 6 days. It's got a little bit of a bend to it, but there is that pace of the roll tool out available on the CME Group website. So I think you can even go to cmegroup.com/POTR, or you can go search for equity pace of the roll. And there's a couple different versions of it. There's the equity pace, which is a more complicated version, and there's a simple pace of the roll, which I just sent out as a picture because it's a lot easier to visualize that way. One comment I have is I'm starting to think, remember Philip Glass from the Brady Bunch? That was Jan's boyfriend. Never really saw him, but we heard about him a lot. I think that's Rick Rosenthal, because I don't know if he exists until I actually see him. Because anybody who's listening who watched the Brady Bunch, remember Philip Glass. Did you watch the Brady Bunch? Did you watch a Brady Bunch?
Absolutely.
You know, not enough to remember the name of the boyfriend. That's
Jan's
that's
boyfriend.
A huge trivia question. That's a huge winner. But yeah, Rick Rosenthal exists.
He does exist. Okay, just making sure.
Yeah, he does, and he's coming.
He's on his way. All right, good. What's happening here in the Russell? No, I'll just reiterate. You know, again, we always have to temper our sort of. Well, maybe I shouldn't say it. We have to normalize our gauge, because we see this week a 15% increase in the Russell 2000 option open interest. Now, it's not a big number to a big number, but it's still a good percent, right? So in this case, a percent means something because you're getting a big jump. So this is that's good news, and I'm sure it's good news for everybody. I think also, Sean, you can correct me if I'm wrong, but I think once you get to a level of OI, then people's interest starts to increase trading that product as well, right? So I think if you get to a 6-digit OI or a high 5-digit OI, then that's where the OI will start to get pumped up even more, right? And I would imagine that's the case as well.
No question. Yeah, no question. The open interest is north of 400,000 on the CBOE, and it's well over 500, and I want to say 550,000 contracts out in CME. That's including futures and options. So there's quite a bit of open interest, and I think that is definitely piquing people's interest. That's a really good point to bring up.
Yeah, so it's almost 30,000 now. So and the numbers will get better, and it's obviously gotten better, and as people get more comfortable with it, it'll be exciting for everybody to watch that. And then as far as the vol goes, not a real change. We still see that investment skew here in the Russell, but not quite as much as we see in the regular E-mini contract. But as far as the most interesting thing there is just the increase in the numbers overall. Like Mark mentioned, we had the bigger prints last week, and now we got the increased open interest. And then last week, let me check really quickly with this week. A report. Last week we had a really big jump. Now we probably lost some to expiration, but we probably had a similar increase in open interest last week as well. So look forward to seeing how that continues.
Well, we got, let's see, moving on to some other complexes here. We got chiming in by a listener, Options Game regular chimer in on all things TWIFO. He said, should be a nice TWIFO on Thursday. Well, thank you. And he wants to know if we're ready to talk about ags. Yes, we are. We'll get right into it right now just because you asked so nicely. We can get into some ags. I kind of touched on some of the volume records at the top of the show there. Obviously, trade war still in the crosshairs. Beans, ground zero. Remember a few months back we talked about zero purchases of soybeans from China, from the U.S. to China. That was a record that hadn't really happened before. Recently, they had been talking about this out there. I think the Ag Secretary back in late February saying that China is going to start buying some beans again. He talked about 10 million tons, and now we're seeing some of those numbers start to aggregate out there with about 500,000 tons of beans getting bought or purchased by China right now. So that's been a little bit of an interesting driver. Perhaps not enough, though. We're still seeing the soybeans hovering right around this 900 level, which has been a level that's kind of been dogging them for some time. People get worried. It breaks through 900. Things seem a little bit better. It rallies back above 900. But this 900 level has kind of been a pesky level ever since this trade war really got into full step. So they're off about 1% on the week. Again, flirting with that even number, that 900 level. Vol, again, up a bit across the board, but not a ton. out there. And in terms of where the action is, it's not going to surprise you when I say it's the 900 put strike, because that's pretty much where all the action was this week. Let's go out to May here. That's where the biggest print is. Almost 11,000 contracts of these May 900 puts. Again, an even number, even money strike. It's kind of where a lot of interest has been anyway, so not surprising. This one's dominating the tape. Nearly 11,000. The biggest print coming on Wednesday, nearly 4,000. A net kind of slightly biased opening, about 1,000 or so. Not a ton, so a lot of back and forth on that strike. Again, not surprising. It's a very, very popular strike. Number two, though, if you're looking for the call side, there's some call love to the tune of the pars, the 1,000 calls out there. 9,300 of those going up this week. The lion's share, nearly 6,000 on Tuesday. So Tuesday, a big day for upside in the beans. Nearly 5,000 of that opening on the week. So opening to the upside, back and forth trading on the at the money now strike, which is the 900. That's kind of the order of the day. I'm just looking here if I can see any other funky prints. Don't see a lot of other funky prints. Mr. Nick, as the trade war has kind of ebbed and flowed, have you seen an uptick in interest over there on quick strike on the ags and in particular beans? And even if you haven't, or if you have, perhaps, I'm curious what is, if anything, is catching your eye out there this week in the beans, sir.
Well, it's all a load of beans as far as I'm concerned with all the talk.
You're just full of beans today. I know
I think they're all full of beans, just because that nothing's getting done, and there's just always an effort to push the market one direction or another. I will say this much: as much as we're, just looking at the charts, we're bouncing around. If you look. Futures are generally in a range, kind of flat, and vol is really sort of saying the same thing. So when I look at, I have a 1 year here. Let me go to a 2 year. When I look at the 1 year range, we're sort of at the lows of the 1 year 30-day constant maturity range on the beans. We're not quite at the lows of 2 year, but we're not that far away from them, maybe 2 or 3 vol percent. So it's, these rangy times, we might go through strike, bounce around, and people get worried. We go through, we come back down, but we're not really moving away from the strike. So the at the money is showing that we're just sort of, kind of moving sideways from a volatility standpoint. If I look at the quick skew, and I start to see sort of a similar thing here. Let me turn off one. I'm going to look to the 25 delta. So right now we have the puts are kind of flat to the at the money, and the calls are slightly bid to the at the money. So we have we just mentioned it again in the other. I think we started to talk about it a little bit in crude, and then said the same thing in the 10-year. There's a little bit of call skew, but there's not really that much call skew here. We're in a low, and we're approaching some lows in volatility. So it's typically a place where, again, not knowing those markets other than looking at the volatility and the OI and the futures movement and stuff like that, we're in a situation where it's sort of a coin toss into which direction it goes, and market doesn't really, the people trading it don't really, at least people trading options aren't really telling us much from a skew standpoint. But I do know that the vol is approaching or near 1 year lows and approaching 2 year lows. So that's probably something we should pay attention to, and probably some opportunity there for some trade ideas. And maybe we'll see something come out from the macro hedged guys in the beans, taking advantage of the fact that we got a pretty even smile and low volatility.
Yeah, it's interesting stuff. We probably could do a lot on the ags. There's a lot going on in the ag complex. You have wheat hitting lowest level in more than a year out there. We talked before at the top of the show about some records in corn options. I was just looking over corn while Nick was talking, see if anything leapt off the screen at me. Not a ton going on this week. Corn off a little bit this week, but interesting stuff. We probably could do, again, we'll bring on some guests who are specialists in the ags, and we'll do another deep dive, because I know you're out there. You ag heads are out there, and there's enough going on and enough products in that complex that we could probably spend a decent chunk of the show just talking that. We want to make sure we're kind of grazers here on the show. Listen, we graze on different complexes, and we want to graze as well on the old metals, the shiny stuff, before we get into some of
the metals. Love the metals.
You're a metals man. I know it. You're into all things metal, 80s hair metal, precious metals, you name it. If it's a metal thing, Nick loves it. Let's see this week here. Gold off another about 15 handles or about 1%. So shy of that 1300 level again, right around 1286 or so in that front month contract. In terms of vol, up a bit again, seeing a little bit of downside, seeing a little bit of a bid, but not a ton. Gold vol, it's the same old story. Can't catch a bid, but the underlying's moving. So it's cheap enough. You're getting an underlying moving. We said it before. We'll say it again. If you're savvy with your scalps, you can make that cheap vol pay for you because you're not paying a lot for it and the underlying's moving. So the combo is usually something you could work with. If it was just cheap and nothing was happening, that's a different story. But we are getting some movement out there. So that at least should resonate for those. I know the gold bug's not happy with the movement this week, but at least you're getting a little bit of action out here to merit what little vol you're paying for. In terms of where the action is, surprise, surprise, we're breaking through 1,300 to the downside. 1,300 calls are still where the lion's share of this week's interest was coming out in April. 1,300, nearly 11,000 on the tape this week. The lion's share coming today, actually. 7,200 going up today. Looks like the 05's also going up nearly 7,000 times today. In total of 7,300 times on the week, so maybe a par 05 vertical going up. Looks like similar paper, about 7,000 contracts on each. The rest of the week, 1305s didn't do anything really, so all that paper coming today, kind of interesting. Certainly looks like a duck and quacks like a duck. Probably a little bit of a tight vertical going up there. Let's see what else was trading here this week. Let's go a little bit farther out. Oh, we go out to, what do we got here? July, the July 1240 puts, also lighting it up to the tune of 7,600. All of that pretty much coming on Monday. 7,300 of that coming on Monday. The rest of the week kind of inconsequential. So you got some farther out puts if you got a little bit more nervous as well. Let's see. You like to scan for the crazy outliers here. We got June 2020, 1,600 calls going up appropriately enough 1,600 times this week. So that's kind of, I guess, our weird outlier print for the week. Actually, that's not enough. The 14 quarter calls in DISA this year. I know some of our listeners like to keep an eye on the gold whales. Maybe that's a more reasonable whale. The 14 quarters going up 5,000 times this week as well out there in Dees. Mr. Nick, I know you love all things precious. I know you love all things hair metal, death metal, Norwegian metal. All things metal really resonates with you. So what was catching your eye in the world of metal this week, sir?
Well, first off, it was good to see it. It couldn't go through the levels that it was at, right, up the highs that we came off of. So it came right straight down. And it kind of caught me. I wasn't paying that much of attention, and until the second breakdown. So, I like that just because it always seems like a good opportunity to get in and do some stuff. So we came off of earlier, up 1330 almost last Thursday. Yeah, 1327.5 all the way down to 1287. So, you got a $40 dive there in the futures. Now, we didn't get much. We don't get much of a bid here in the vol at all. So we're on again. I can send charts that you can take a look for yourself. We're approaching multi-year lows again in the gold, which I like that. I talk about it all the time. And in particular, if you look at the May contract, it's got like 49 days to expiration. It's got a pretty good smile to it. Now, where our strike is kind of up the right side toward the call side of the smile, so the belly of that curve is at the 1270 strike, and that happens to be around the 15 to 20 delta range. So there's some opportunity. Like what have I said for the last 18 months? I always talk about buying that cheapo put and hedging it. So it, again, seems like a pretty good opportunity here. And to, quite frankly, I would think that you probably could wait a few days on it, even because if we slide down a little bit further in the futures, I think you get it for, you might be able to get a little higher delta with, and a little bit closer to your break-even points, because we're in a range again now, and just as easily we're off 40 points, we could be up 40 points again. So that's one of those things where that's why I like this product. I just think that it's a good range. It's sort of it's a wide enough range that it feels uncomfortable sometimes, but it's not like it's just going to blast off to the upside unless there's a debacle, right? And we kind of have hit our floor. We kind of see our floor at like the 1160 mark. So 1160 to 1360, and you get some chances to buy some cheap puts when you're low side of the range, or buy some cheap calls and hedge them when you're in the high side of the range. I still like that play. Talk about it all the time. I'll continue to talk about it. And I think it's out there. Like I said, I think it's out there in the 10-year too. And if the crude starts staying in this consolidated range, you can have the opportunity there as well. So.
All right. And speaking of opportunities, it's time for you guys to take your opportunities to join us on the program with a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. You guys certainly have been busy with your questions. Let's see how many we can get to. FTTP, yeah. Easy handle to say here. All the talk about skew, is there any way that I can just buy or sell skew? Is it quoted anywhere as a product that I could trade? Maybe ag skew is high this week, and I want to sell it. Well, first off, if you size enough OTC, they'll quote you whatever the hell you want. So if you want to call up and say, you quote me the skew and the beans, they'll do that. They'll quote it for you as a product. They'll charge you a hefty premium to do so. But they will do that. But I'm going to guess you're probably more on the active retail side. So in general, off the top of my head, there really aren't any products that are listed out there that you could say, hey, you mentioned ag skew. Certainly not for ag skew. There are some products that attempt to quote and track equity skew, but they're not really tradable. Like the skew index comes to mind on the S&P. It's a weird, nomenclature, weird quoting convention. It's 125 usually to 150. It's a weird, it's kind of obtuse to wrap your head around. But again, that's because the premium in equities is usually to the put, so that's why they have to do it that way. So there are things we see quoted that are abstract indexes, but nothing that I say, hey, you can go to your broker and easily sell a packaged skew product. You can obviously do it yourself with risk reversals. We talk about it all the time here on this show. You can do it a lot of different ways with any sort of wide vertical, but not as a quoted thing. Maybe Sean, here you go. Opportunity for you guys at Russell. FTTP, he wants a packaged skew product. Maybe that's what we need from Russell, huh? What do you think? Are you liking some sort of Russell skew product?
I'm liking it. It's there, so take advantage of it when you can, and from either side of that trade.
So what you're telling me then is we can expect this to be listed next week. This is breaking news from Russell.
A skew? No. I'm sorry. I misunderstood your question.
I'm just teasing. I'm giving you a hard time here, Sean. So yeah, FTTP.
He can't give investment advice.
I'm an options trader, so I went right to the existing product suite. I apologize for that.
Nick, you like this idea, quoting some sort of skew product?
Well, I mean, you could always sell skew, right? You could sell skew by selling the thing that's high and buying something. So if you want to sell skew, if you think the upside skew is in ags is high, you can buy that the money and sell the wing, even it up from a 1x2 standpoint with some Vega and hedge it. Or, you can do a outright and hedge it that way, or you can do a neutral trade where you weight it to the overpriced, in your opinion, version. So you can sell skew by selling the options and hedging it. If you think vol's out of line, that's what you do, right? So
exactly, that's exactly the point I was making. I was right to an existing product to do it.
Yeah, all this stuff is there, and then you could do it. It just, obviously, if you listen to this show, we've talked about how you can do it before. So it's all available, not in a neatly wrapped up bow package, but it's there. So you can do it just a little bit, requires a little bit of diligence, a little bit of savvy on the options front. Speaking of savvy, Marker, maybe Mark R, I don't know. Nick, this one looks like it's for you, which I'm assuming QS is Quick Strike. Which version of Quick Strike has the slipping and sliding stuff? Mr. Nick, which version of QS has the slipping and sliding stuff, sir?
It's not only slipping and sliding, it's moving and a grooving as well.
Can you fit all that in the column header?
So maybe we could. Okay, so the slip and slide, That's in all versions. So you can see that number in the free version that's on the CME Group website. You can also see it in the subscriptions. The difference in the subscription versions, which I will now plug, our new quick apps version of the TWIFO report, which is available for the low price of $300 per year, where you can click on that slip and slide number and actually see how the curve has changed. So you could see the graphic version of that and also see a little bit of the history behind that change as well. So if you want to dig into the TWIFO report and actually see the stuff that Mark is talking about, or look back and see it as well as you're watching, you can look at that quick apps version, and I will tweet a link out there. It's apps.quickstrike.net. You can go out there and subscribe right away, and you can also go out to bantix.com and you can go to the pricing link, and you can see a video about how to use the TWIFO tool and what you're going to get with the TWIFO tool. But it's everywhere. The number's always there. The details, or the deep dive, as Mark likes to say, is in the subs. But now we've made those subs very approachable and affordable for most people.
I'm just reading some of the chat here. It's very distracting. So I'll just stop reading that. Let's move on to let's see. Tomas wants to know: do all brokers offer futures options? Well, short answer, no. Obviously, but long answer, better answer, I think, is that more offer them now. If we had started the show 10 years ago, let's say, there was still a niche area. You had to have some specialized product paper releases like RJO and a few others that really specialize in this area. And a lot of your broad, quote unquote, mainstream financial brokers, your TDs and others, A, they were a shadow of what they are today, but B, they didn't offer this stuff because they thought it was a niche area. Fast forward to today, and pretty much all of your big platform, they see this. And when I talk to these brokers, we talk to them all the time. A lot of them see this as their main growth area. They want to grow in crude options and gold options and ag and all this other stuff like that. So they're really building out the functionality. The other downside to this was the futures and futures options side, from a functionality, from a bells and whistles, from a UI standpoint, was always conservatively 5 years behind the regular equity space, because that's where the competition was. In futures options, not so much. These days, with the big players getting into it, you can trade these products with nice actual bells and whistles. We're talking here about slipping and sliding. You can look at skew curves. You can actually trade with the tools you demand as an options trader. So I think long answer to your question is a lot more offer than ever before. They've made it easier to really get that, because you still have to open up that futures account, but usually it's a couple of clicks on a website and you're good to go. And it's usually the same UI, same interface. It didn't seem like you're changing accounts. So long answer to your question is yes. No, but a lot more are doing it as easier and better than ever to really trade these things, which is fun for the listeners of this show. Nick and Sean, do you guys have anything to add here for Tomas?
I'll go first because I have the least to add. I'm sure that most of them are doing it at this point. I only know sort of the retail platform or two, but Sean, what do you say? I don't have much from the brokerage side other than the brokerage use of Quick Strike. I don't have much from the practical brokering side though.
And the question is, where can they find brokers, or?
It's just
they all trade futures options.
Do they all offer futures options? The answer is obviously no, but if you have any more nuanced answer.
But I would say there are more now than there ever was, as these products continue to grow in volume interest in trading, and actually retail through, some of your big firms like TD Ameritrade and E-Trade and TradeStation. Trading America has a phenomenal amount of options brokers that will give you advice on about the product itself and walk you through transactions. They do a phenomenal job of that. They're a huge partner of CME Group, by the way, on this front, on the education front. But they have folks in-house that you can just call and talk to about the product. And, I'm sure E-Trade has the same. I would say that there are more brokers that are versed in futures options than ever before at this point.
I would definitely concur with that. Let's wrap up your chiming in with some love. We always like to love. Our buddy Options Game, he chimed in earlier. He's listening obviously live now. He said, guys, tune in for TWIFO. If you trade futures options, this show is for you. Well, thank you for the love there, sir. He also chimed in because we were talking about ag calls. He's the one who asked about ags. He said, we've seen a heavy buyer of the July $4 calls. I'm thinking he means premium outlay in terms of what he's talking about out there in corn before the USDA report tomorrow. He says he looked at a fly, but he wasn't convinced. Well, there you go. Like I mentioned, there is stuff going on in all of these different ags. But unfortunately, we don't have enough time in the show. We've tried to give it to you at a nice, tight 45 minutes. Even today, we're going long because there's so much fun stuff to talk about. But we just love talking to you guys, which is why this show is so fun at the end of the day. All right, but unfortunately, that music means we got to wrap it up here for this week on TWIFO. But before we go, let me go back around the horn. Sean, you and I will be sitting down in a warm climate next week to talk all things. But in the meantime, people want to learn more about what you guys are cooking, what you guys have planned over there at FTSE Russell. Where should they go? What should they do, sir?
Come right to me at smith@FTSERussell.com or our website, FTSERussell.com, number one and number two. But again, watch the open interest as it grows. I think Nick brought that to our attention today, which was a great add to the discussion. So thanks for that, Nick. Three, those other regions, Europe and Asia. Keep watching that trade opportunity during those hours. The volume continues to grow there. So I mentioned it, I want to say about a month ago, and the story continues to be a good one there.
Good stories indeed. Check them out, FTSERussell.com. Learn more about the roll coming up and all the reallocations. And also, I'm not sure where that came from. And then also check them out at FTSE Russell on Twitter to give them a follow. And last but not least, Mr. Nick, sir, you already mentioned kind of what you guys are working on, but if you have any other plugs you want to throw out there for all things Quick Strike, a.k.a. the slipping and slide and stuff, where should they go? What should they do?
Lots of plugs. Can I file a workers' complaint after that piercing sound in my ear?
I don't know what that was. Someone was trying to get at us on the show here, I think.
Yeah, my goodness. So yeah, a few things. So like I mentioned, we're going to put out 4 or 5 what we're calling quick apps, and those are going to be individual tools that you can purchase outside of the Quick Strike platform, by themselves basically. Right now we have TWIFO, which in my opinion has one click in there that is worth, where you can get 12 years of days to expiration comparison. So basically a 12-year seasonal curve as part of TWIFO, which is worth it in and of itself, on top of all the other stuff that the other 7 clicks that will get you. So there's the TWIFO report. And then there's also, through the demand we had, and we offering Spread Builder as a separate tool. So we have, again, not just in my opinion, but in the opinion of a lot of people that use it, one of the best tools to build spreads and to analyze them, to lock them in, to trade them, to see your P&L. And you could see a really, really good practical example of how that's getting used via at Macro Hedge, because they're using our tools to present the trades as well. So it's really 2 great things that are coming. And then another one that's going to be coming, and we don't know if this is going to be included as a regular piece of the quick apps, or it's going to be an even lower cost. We have Quick Options EDU for education. We're going to, for people that trade futures that want to learn how to trade options, we're going to show you graphically how the price changes and the Greeks change as you move the main inputs of the future, the volatility, and the days to expiration on the pricing model. So got a lot of good stuff coming. Probably have a couple more tools. And also, stay tuned. We're going to be offering a bunch of different things.
Hey, Nick, when's that tool coming out?
Which one? The education one?
Yeah, the education one. That sounds fantastic.
Yeah, I think it's going to be good. I'm really excited, and it's ready. So it'll probably be out there for a limited audience this week, but as an availability thing for the rest of the world, probably a couple weeks. But I'm pleased with it, and we're gonna, I'm trying to make sure that it's enough to release, and then we'll add to it as we go forward. But that's what we got going. Has some other tools coming out via the CME Group website, and for you people that are using CME Direct, Quick Strike is now integrated with the web-based version CME 1, so you can get Quick Strike information cards as part of your mobile application, CME Direct mobile application. So right now there's 5 views out there, but we'll be adding to those views as well. So take a look. A lot of good stuff happening from this side.
A lot of good stuff. You can check it out wherever you find your favorite stuff. Bantix.com, the place to go. Quickstrike.net, or as you mentioned, the CME version over there as well. And on behalf of Nick and Sean and our friends over there at CME, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in all your crazy, great questions. We love them, for joining us live. By the way, those of you listening live, and those that allow you like Vol Views, I know. Different time tomorrow. We've been pushing it back an hour, 1 p.m. Central. We got some new partners on that show, and they beam in from across the pond, so it's a little hard to do it at noon. We're trying to let them sleep in a little bit, so we're going to be doing it at 1 p.m. Central, 2 p.m. Eastern going forward. It's a little bit fluid on that time, but for now, 1 hour later than it usually is. And next week on this show as well, we also will be doing a little bit different time next week. Again, it's the big FIA Boca show, so it's going to be hard to stay on the live schedule. You'll still get your podcast, don't worry, wherever you download it, but the live schedule may be a little bit different next week as well. Mr. Nick, one more thing. Hurry up, sir. Hop on real quick.
No, I don't now. You got to let me know about next week. I was actually going to come into the office next week because I'm going to be downtown on Thursday. Gosh.
No, the whole world is going to Boca, sir. You got to go to Boca.
Nah, that FIA thing, I won't even comment. Anyway.
There you go. Mr. Nick chiming in on industry gatherings hither and yon. So we won't see him next week probably, but maybe we'll get him to join us remotely. We'll see. It depends again on the connectivity we have down there at the resort. And on behalf of everybody here, we want to thank all of you for downloading, streaming, subscribing, joining us live, all that fun stuff. And we'll see you back here tomorrow for Vol Views, and then back next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.